Joining me to talk about the mortgage REIT market is Brad Case, NAREIT Senior Vice President of Research and Industry Information. So Brad, there's been a lot of discussion about what's going to happen with Fannie Mae and Freddie Mac. One speculation that we've heard is that mortgage REITs may step in to take some of those assets. What's your take?
Well, Freddie Mac and Fannie Mae, the two GSEs, have played a very important role in the housing finance system in the last several decades. Not just in the single-family owner-occupied housing, but also in multifamily rental housing as well. I think it's safe to say that the federal government will not move very quickly, will not rush to take care of the situation. They're going to take the time to make sure that they resolve the current situation in a way that benefits the entire housing finance system, but also exposes the government to less systematic risk going forward. So I think the other piece of it is it's probably safe to say that there will be less mortgages held on the balance sheet of those two GSEs, and that's where the mortgage REITs come in. Indeed, they are one possibility for taking over most of the ownership or much of the ownership of mortgages that the GSEs have been doing to date.
So far this year, we've seen existing mortgage REITs raise significant capital. Now, is that in anticipation of taking on some of these GSE assets?
Yeah, I think it really is. You know, we've seen mortgage REIT investors very interested in the opportunities that mortgage REITs have going forward. So the mortgage REITs have raised capital to take advantage of those opportunities. You still have very, very strong dividend yields in the mortgage REIT sector. Going in dividend yields are about 13% right now. So investors really are looking at a combination of very strong current income relative to the stock price and also the opportunity to acquire more assets going forward.
And now this year we've already seen a number of mortgage REITs, potential mortgage REITs, filed to go public. Mm-hmm. However, we haven't really seen them come to market yet. What's your stance on where the mortgage REIT IPO pipeline is?
Well, I think there are two parts to that story. And the first is what you were mentioning before about the amount of capital that's being raised by existing publicly traded REITs. Some companies that are very well managed, and they're positioning themselves to be the ones to benefit from the changes in the housing finance system. So potential new REITs have to compete against the existing REITs. But the other part of the story is probably the more important one, and it's simply that the origination of new mortgages is at a very low level still. And I think the opportunities to acquire mortgages will be in the future as households get more comfortable with the idea of owning houses and taking on mortgages again. But until then, we're really looking at the potential and not so much right now at the new originations that'll give them assets to invest in.
For more on this and other REIT news and analysis, be sure to visit REIT.com.